It should be going live. There you go.
Yep.
Kia ora whānau.
Kia ora all. Thank you so much. Okay, so once again, welcome to Stuart, Amy, Rick, Joss, Penny, Bruce. We've got Judy there too, have we? And I think Kim, Beryl, and Toby may be coming in a bit later. Yeah. Okay.
Excuse me, Colin. Danny is here. Danny has joined.
Say that again.
Danny has joined. Danny is on.
Danny has joined. Okay. Thanks so much. Hi, Danny. Welcome aboard. And Danny, as you has joined us now, would you like to do the care on my behalf? Thank you.
Yeah, thank you, Chair. Happy to do that.
Thank you.
Nō reira I tātou mai, I tēnei taima hei honore māku kia whakapuare tika ai tō tātou nei huhunga I te reo rangatira. Nō reira I tātou mai, I tēnei taima tāhuri o konei kupu kia rātou kua haere ki taua kāinga e kore ki, haere ngā mate, haere atu rā. O konei mihi kia tātou I hāni te oranga o tātou rā. Ko tai mai I tēnei haura, I tēnei taima, ki tēnei huhunga o te tangata, o te taitoku rau. Nō reira tātou mā, tēnā koutou.
Thank you so much, Danny, for starting us off with that care. Just housekeeping matters. I know most of you are Zooming from home, so I think you know where your exits are and the toilets and everything, but just make sure in your home you have a working smoke alarm, and if in an event of a fire, you always must have 2 exit ways and have a meeting place. So when you get out of the house, the main meeting place is at the letterbox or in the front of your place. And the other one, the people that are living out in the country, make sure that you have access for fire appliances to get into your properties, not overgrown trees, because they're quite big trucks. Thank you. That lecture. Okay. Apology. We have no apologies. Any apologies? Don't appear to have any. Okay. And okay, we'll go into declaration of conflict of interest during the our discussion today. If you believe you have a conflict of interest, just bring it up and we'll address it from there. Confirmation of minutes on the 24th of November 2021. Somebody present move that they be a true and correct record. Thank you, Penny.
Yeah.
Second, Joss. All those in favour? Aye. Against, no, carried. Okay. Matters arising or areas of omissions from those minutes. I think Penny, you had you brought a point up, and that's been clarified for you moving forward. Yeah. Thanks, yes, Penny. Yeah. Okay. Just today, as you see, we have got quite a large agenda there. A lot of reports, very vital information coming forward. So I did get hold of everybody, send an email out and just said if anybody had any questions and that before the meeting to bring them forward, and Penny did, but other than that I didn't get any queries there. So I think it should go straight forward today with that. So what I'll do now, I'll move on to item 5.1. And then I'm just going to go and check with 5.1, 5.2, 5.3, 5.4. And we have Peter and his team here today. So I asked Pete to start off with item 5.1. And I'll just move that we accept the thing. And I'm a bit struggling a little bit here, team, is I've only got one screen here, and my minutes I haven't got them up here. I've got a little laptop beside me, but I'm having a few difficulties here. So do bear with me, and I'll just rely on you, Bruce, and the staff or any screen sharing. If you could do that for me.
Thanks, Chair.
Okay. And Pete, welcome to you and your team. And probably looking at those 4 or 5 subjects here, how's 3/4 of an hour or so? Do you think you'd cover those?
Yeah, I think so, Mr. Chairman. Yep, no problem.
In that time?
What I might do is ask Ian and Dom to talk to item 5.3, which is the fraud and corruption risk assessment, and then they can then dial out of the meeting after they've covered their specialist area, if you like, if that would be okay.
Yes, that'd be great, Pete. I just Bruce, you had your hand up.
Yeah, thanks, Chair. I was just going to mention that item 5.1 is really just a noting item. It just shows our internal audit schedule.
Yeah,
I'm happy to answer any questions on that.
Okay, we'll take that. I think that is pretty straightforward. I'll move that paper be accepted. We've got a seconder for that. I think we did do that. Yeah. Yeah. Any comment on that? If not, all in favour? Aye, against, no carried. Okay, right. We'll move on. Thank you, Peter. It's all in your hands now.
Okay, thanks, Mr. Chairman. Well, look, turning you to item 5.3, which I think is on page 19 of the agenda pack. Yeah,
page 19, that's correct.
That's right. So this is a piece of work that's been performed by my colleagues Ian and Dom, who are on the call. And it's a follow-on from an earlier piece of work around assessment of fraud risks and a fraud assessment or gap analysis, if you like. So this is kind of part 2 of the work stream. So Simon's prepared a paper just summarising the key recommendations arising from that piece of work. But what I might do is just pass to Ian and Dom, and maybe guys, if you can try and keep your comments to sort of 10 or so minutes, and then we can have some time for some Q&A from the committee members as well.
Great, thanks, Peter. I'll get into it. So can we share our screen if that's okay?
Yep.
Let's do that now. Hey, so a bit of background. As Peter pointed out, back in earlier last year, Council completed a counter fraud gap analysis, which was essentially comparing Council's protection level against a better practice model around fraud and corruption risk. And one of the key recommendations that came out of that was to complete a fraud and corruption risk assessment, which is really aimed at strengthening your key processes and controls to better protect the organisation and your people from the financial, reputational and cultural impacts that come with fraud and corruption events. So in terms of the work that we completed for this piece, we started by sharing a survey with Council staff, and this is what we do at the start, just to gather your team's perspectives around fraud and corruption awareness levels. So it's gathering that, understanding what risks that they see may exist at Council, and finally to get any suggestions they have around beefing up your controls around key processes. And then beyond the survey, we focused on corruption risk, which is the one risk that can cause the most impact, even if the dollar levels are small. So to do that, we conducted some related party analytics testing, which is essentially looking for connections between your third parties who Council does work with, the vendors, and your employees, just to see if there's any unknown relationships that may exist between the two, which could be the start of something if things aren't declared, which is, I point back to your the conflicts of interest process that you went through just a minute or two ago. And then the results of that survey and the analytics were informed some mini workshops. So we gathered up some selected personnel in higher risk roles at Council to essentially brainstorm corruption risks that could play out in their teams with a view to identifying the risks and making suggestions around beefing up your controls so that the risk is reduced. And just finally, before Dom gets into the results of those 3 phases, we did find, which is really positive, the NRC folks that we worked with during this engagement were really positive, open. Some clients, we find the teams are a bit closed off and a bit defensive. That was not the case with NRC. So we enjoyed the work and found it really valuable and an open dialogue that was going between council and us as we work through those risks and thoughts around beefing things up. Over to you, Dom.
Thanks, Ian. So next up, I'm going to start by talking through the survey results at a high level. So what we've got here is a visualization of some of those results. So what you can see on the screen at the moment is the responses to our question around confidence to spot the warning signs of fraud and corruption occurring at NRC. The median line sits sort of at the top end of 3 out of 5. So people in this question were asked to select numbers 1 being not very confident, 2 being slightly confident, 3 being moderately confident, 4 being confident, and 5 being extremely confident. So that set the tone for the survey questions that they were asked. We had 144 people respond, and some of the responses, like this one, generally showed a positive response in relation to the question. We also had questions around their comfort levels to report concerns and familiarity to report concerns. So the top 2 bars you can see here, the responses to those questions. You can see that people have responded quite favourably to being comfortable around reporting concerns that they might have at council, but you can see that there's less familiarity with how they might report them. And then we asked people who hadn't responded that they were really comfortable reporting concerns, what was stopping them being really comfortable. And you can see the green lines here in the chart showing a breakdown of the responses by number for the different things that would stop people from making a report. So you can see clearly we had 22 people out of the 144 saying they didn't want to be regarded as a troublemaker, which might be why they wouldn't report concern, or they're concerned about their identity. Number 3, they didn't have access to an anonymous and confidential tip-off line. And then you can see further ones below. And we've got some comments on the right here. You can see that people used to build on the answers that they'd given in the survey. Some of the other things that we saw in the survey that we haven't got on the screen are staff talking about potential schemes that they perceive to be of greater risk. And some of the themes that came through from that were potential schemes around invoicing and approvals, around procurement of contractor services, and compromise of IT or user access at council. We did have 88% of respondents either agreeing or strongly agreeing that leaders consistently behave with honesty and integrity at council. And the top improvement opportunities that people highlighted to better protect council in their view from fraud and corruption risks were that council could regularly identify and communicate specific fraud and corruption risks that they should be aware of, provide an anonymous tip-off line for people to access if they need to, and provide additional awareness training to equip employees to identify and report any unusual activity. So that's the survey. Now moving on to the related party analytics that we did. So the focus of this was identifying connections in your data between the vendor master file, so that's all the data relating to vendors, and the employee master file, all the data relating to employees. And this identifies shared attributes that these 2 different data sets might have. So that's things like names, bank accounts, addresses, phone numbers, emails, and so on. And the data we collected was from across the past 2 years. And what we've got here is a visualization of what a connection might look like. So you can see here, you've got V for vendor, E for employee, and N for next of kin. And you can see the ways that these 2 data sets might be joined. So in the example you can see on the screen, we've got a phone number that's common connection, a bank account or 2 bank accounts, and an address. What we did with all the connections is we prioritized them. So we, once the connections were identified, we'd assess the value and assess the nature of connection. So a higher priority would be high spend on a vendor that's connected to an employee by name and address, for example, and a medium priority one may be one with lower spend and a looser connection. So, so that might be an email address that's common, but not the name and address. And we've presented these findings to management, who are following them up at the moment. Then moving on to the fraud and corruption risk assessment, the key risks and recommendations that we are making as a result of the risk assessment. So the key risks that we see are your conflict of interest and bribery risk. And the recommendations following on from the workshops that we're making in relation to this are to continue on the journey of using detection-focused analytics to help identify matches or anomalies in your data, building on the fraud and corruption awareness training with a focus on providing corruption-specific training to your people to equip them to identify and report anything that they might see, and provision of a disclosure service, preferably one that's available 24/7 and is provided externally to reduce the risk of that retribution fear that came out from some of the survey results.
And importantly on that one, there would need to be an appropriate communications program around it to encourage people to use that mechanism and to allay those fears that they may have.
Yep, the next risk was inappropriate file allocation within the regulatory services team. So incidents that come in that need to be followed up by your regulatory services team, providing some oversight or automation of the way these are allocated to reduce the risk of someone responding to these from council who has a conflict or a connection with someone related to the incident that they don't raise. We've got your grant procurement, your grant process and your procurement processes, so giving out money or procuring things from suppliers. We're suggesting that you implement a declaration of interest procedure for every grant that's awarded, so that the person awarding the grant from council has the opportunity to make the declaration during the grant process, and then management can consider how they deal with any declarations that are made and manage any potential conflicts or perceived conflicts. And then for your higher risk procurements, having the same process, so having a declaration of interest process for spend on suppliers. And it might be that if you take a risk-based approach to that, you identify a threshold of spend at which you apply this new procedure to all spend above a certain amount. So you're focusing on your larger spends. And then finally, we've got contractors in higher risk roles. So an example of this might be, again, in the regulatory services team, where we're using contractors to make decisions around issuing notices, infringements. We're suggesting that you do some enhanced reporting or provide the opportunity for greater analysis to be done across the types of decisions that are being made by contractors, to allow you to identify whether or not there's any difference in the decision making from your contractors, who we're told often don't receive necessarily the same training as your in-house people. And then you can make any decisions based on what that reporting is telling you, but it would give your management increased visibility of the activity of your contractors who are performing those higher risk roles.
And I just before we hand over back to you, Peter, for maybe questions. So I did talk about the higher risk roles in terms of corruption risk, but that was, just so you're clear, it was the reg services team, the governance and engagement team, and biosecurity and environmental services were the functions that we deemed as, or collectively agreed, pose a greater risk in terms of corruption risk rather than fraud. Okay, well that's the material we wanted to cover. Peter, we'll hand back to you if you like.
Thanks, Dom and Adam for that report. And I've just got a couple of questions just before we hand back to Pete. Is in relation to how do we stack up about in relation to other entities as ourselves, other people that you've audited in this sector?
Yes, so we do a lot of work across central government and local government, across our team of 40 covering the country in the forensic practice. And I think you're probably middle of the road, if not a bit better than others, given your size. So some of the larger councils are doing more. And then there are those at the small end of the scale who do very, very little.
Yes.
So it seems, it seems you've struck roughly the right balance from our perspective.
Oh, thank for that, and I was very enlightened to hear that, and that the rapport that we have between Deloitte and our staff, and I'm very, very pleased that this, we have a strong bond, business bond between us all. So thank for that. I'd just like to welcome Malcolm aboard. Sorry, Malcolm, I did not welcome you. Thanks for coming into this meeting. So, have questions, Stuart? Your hand up. Keep it short and sweet, and don't repeat. Thank you.
Can I'll just ask, in terms of the recommendation where you're looking at a recipient of a 24/7 perhaps whistleblower service, and calling that a fraud limitation officer, who would you envisage that person would actually report to? Would it be the executive team? Would it be councillors, or would it be independents? And I guess it comes down to that clarity of independence.
Yes, so what we see most often is the fraud control officer is either a senior finance or risk individual who would either is either an exec member themselves or reports into an exec member. So within the organisation, rather than through any sort of board function, external function.
Okay.
So to clarify that, so that that role is responsible for making sure that all the initiatives are appropriate, fit for purpose, and things happen and get done, which is more on the management side.
Thank you. Penny.
Thanks, Toss. Great report, thank you. Very, very thorough and very interesting reading, and some good recommendations come out. Just a couple of questions. And number 2, the recommendation, it's probably just as much for staff, and I have raised it with Bruce, is councillors aren't included in that training or education. Just wondering if they should be. And the other one was, as in number 6, as I, as chair, sign off on grants, I think the chair should be included in that as well, because it feels like quite a responsible role. So, and the third one and last one was just wondering what your recommendation would be on how often we do these reviews.
Sure. I'll first respond to the number 1 and 3. So councillors in other councils, councillors do receive awareness training facilitated by the organisation. So that happens elsewhere, and that's a straightforward thing to do. And often those sessions are in person, so we get councillors either on a session like this, virtual, or in a room, and run a sort of 2.5–3 hour workshop with them to raise awareness levels. And on the third one, so the regularity of this work. So all the standards suggest that every 2 years you should refresh your risk assessment work. The approach that's been taken with council is identifying the higher risk areas and doing targeted risk assessment work. So this work that we did here was really on corruption risk and across those 3 teams within council. So leaving it 2 years might be what others do is they will identify, say, finance, fraud risk and finance might be another little subset that you might do in a year's time. There's more of a rolling program with small bites rather than leaving things for 2 years. That answers your question. I won't comment on the chair question.
Okay. You happy with that, Pen?
So not sure why you're not commenting on the chair question. Is it just an obvious one to include?
I mean, the chair, in terms of undergoing training, that's absolutely straightforward. But
No, it's a sign off on the grants that I'm talking about.
yeah, so the more I think that might be a material approach. So whether it's all grants, I'm not sure how low you go in terms of dollars.
Oh, for the ones that I am asked to sign off on, I'm just recommending. I guess I'm just recommending that I have to do the DOI as well as stuff.
Yeah, that makes sense, Penny. Yeah.
Thank you. Amy.
Thank you, Chair. Kia ora, guys. Thank you. Really good report and good presentation. I think my comments are actually for Bruce, just more around the implementation. I found the analytics really interesting, so thank you for that. Bruce, I'm just thinking about how the organisation will move forward with this, and I'm kind of interested to know if in implementing and communicating around it, there's any ability to differentiate findings that relate to things that are actual and actual risks in NRC versus those risks which came from the experience and knowledge of the team from other organisations, because I think it's quite interesting to see it all kind of comes together in the report, but there's no clarity as to what was an actual risk for NRC currently versus things you guys, very valuable still, but recommending based on observations you've made elsewhere. And for me, that was a sort of a question in my mind. What do we own and what is coming from elsewhere? And for me, that's just around, you know, in terms of organisational culture and a feeling of, you know, being a trusted and non-corrupt organisation. I think it's really good to have that clarity. And then also just in terms of implementation, the systems and processes solutions that are recommended obviously all make really good sense and they're based on the findings. And I guess for me, there's just another element, which is the human element that continues the high trust and high honesty culture that we have in the organisation, and just making that, just finding that balance, I guess, between systems and processes that protect us, but also that culture of trust and what that means for the people in the organisation. So just an observation, I guess, as I read the report, that was something that came to mind for me. But yeah, really great work, thanks, and look forward to seeing how we're going to implement it. Cheers.
Thank you, Amy. Malcolm.
Thank you, Chair. Just two questions, one for Deloitte and one for Bruce. Just starting with the Deloitte's question. On one of your earlier slides, you had a small pie chart in the corner. Could we just call that up, because I don't recall seeing that in the reports or the reports that I've seen. So I'd just like to understand what that pie chart is telling us.
Just go to that slide now.
Just going to screen share, yeah.
Oh, yeah, stand by. Does that come up on your screen, Malcolm, and others?
Not yet. Not yet. Not yet, no.
Whilst they are getting that
Okay.
screen up, can I have a move and second that this report be received? Thank you, Rick. Seconded. Penny, all in favour? Aye, against, no, carried. Right, it's up on the screen now.
Yeah, so the colours in the pie chart, are they reflective of the colours and the level of awareness, you know, across the organisation for those groups?
No, that's a really good question. So no, and I can see how the colours here actually are slightly confusing. They're not. This is a breakdown of respondents from different teams.
Okay, So it's not an average response from that group. So I don't need to be concerned that the dark blue means that that group isn't aware of.
Yeah, that's correct. Yeah.
Signs of. Okay.
That's the first
thank you.
feedback, so we'll get that change, those colours changed for that reason. Thanks for that.
And then moving on to Bruce. Bruce, when do you anticipate being in a position to be able to come back with specific recommendations as a result of this report or your findings from the areas that have been referred to you for further investigation?
We'll be looking to continue to roll this program of work out, Malcolm, starting after this meeting, essentially. And it'll be an ongoing program of work. So we'll just pick up these recommendations in the report and start to work on them.
So are there any decisions that you want from this committee in support of the work that you do?
No, I think
at the moment the resolution is just to receive, and I would have thought there's some quite specific recommendations in the report that we want governance support for us to implement.
Yeah, I'd look at it by exception. If there's anything that governance doesn't think we should be doing, I'd like to know. Otherwise, we're looking to proceed with the recommendations within the report.
Chair, on that basis, could I recommend that we add another resolution just saying that the committee supports the implementation of the recommendations, or words to that effect?
I'd be happy with that as a chair. And what you're saying here, Bruce, the recommendation that'll be an action that'll come up in the action sheet, taking this process on to the next level. Is that correct?
Yeah, correct. We'll be given effect to the recommendations. And I think it's good to add that recommendation that Malcolm's just mentioned.
Yeah. So all those in favour of that? Aye.
I'll second it, Toss.
You second that? All those in favour? Aye. Against, no, carried.
Sorry, Chair, can we just confirm that's going on as the second recommendation in item 5.3? Is that right?
That's my understanding, yes.
So that'll be another recommendation on page 20, that's right? Yeah, got that.
So let me just
getting it right in my head, that's all. Thank you.
Yeah, I'll leave the staff to do that little fine tuning there. That's fine.
Yeah, that's right, page 20.
Yeah,
thank you.
Josh, you coming in now?
Thanks, Toss. Thanks, Chair. I note Penny also had her hand up again.
Sorry.
Yeah, firstly, Amy's comment was kind of had a question in it that was for Bruce, and there wasn't actually an answer to that, which I'd be quite interested to know as well. So, Bruce, you had your mic on at the time, was just wondering whether you had any follow-up comments after Amy's comments around what is relevant to our organisation and what it's going to look like in terms of how it will be followed through, etc.
Yeah, thanks, Joss. Look, I think the key things for us are the ongoing awareness and training associated with this program of work and the recommendations we roll out, but doing so in a positive manner, because I take on board Amy's comment. We've got a good culture around this, and let's keep that good culture. Let's keep the openness and the transparency, because that's what we need. If we drive this the wrong way, there's potential to drive it underground. So we're not going to try and do that. We're going to try and maintain this in a positive manner, and demonstrate to the staff why we need to do this and what the benefits are for them. So yeah, that'll be our approach going forward.
Okay, cool. And the other question that I had was around the specifics as far as the related parties analytics was concerned, and figure 1, the relationship prioritisation. And there were those that have been referred on to management. And I note there's some quite significant quantums of money that are sitting in that high category, in particular that 100K plus category, with 2 of them there, and the quantum of 448,000. I'm assuming that as part of that process, any issues around fraud would then come back and be reported to the council?
Absolutely. So we do that monthly declaration of fraud within the Chief Executive's report, and I can confirm that there was no instances of fraud found in this analysis. We've been through those results and checked them.
Excellent. That was the answer I was hoping for. Thank you very much, Bruce.
Just before I go, Malcolm, I do apologise, Amy, for not picking up on that question. Sorry about that. Malcolm.
I think the chair had her hand up as well first.
Oh, okay. Sorry, Penny.
Sorry, taking up time. I just noted that, Toss, you mentioned that it needed to go into the action sheet, but I wouldn't have thought that it does, that second recommendation. It'll just, staff will just do that. So.
Yeah. What I was getting at was the whole moving forward. Yeah, we had work to do. That was all. Yeah, okay. Thank you. Yes, Malcolm.
Chair, I just wondered whether Bruce wanted to comment quickly for the benefit of the committee of what our current sort of whistleblower policy is and the fact that we do have an officer appointed. But I mean, I think the bit I took out the report is we don't have a specific phone line that people can phone in. It is relying on them approaching the people. But I don't know if you can comment quickly, Bruce, what we've got in place already, but accepting that it it can be beefed up some more.
Yeah, essentially people can raise their concerns with anybody, but there's also the fraud limitation officer, and we are looking to strengthen that role within the organisation. We're currently doing some work on that at the present time, and that will come back to the leadership team for ratification. But we are looking at also standing up that independent whistleblower line, which provides that anonymous method for people to raise an issue, noting that in the survey, a lot of people were concerned about being called out as a troublemaker. So providing that anonymous line will hopefully improve the ability of staff to feel confident in reporting instances of fraud or corruption.
All good. Joss, have you got your hand up? Or do you forgot to put it down?
No, I just forgot to put it down. Thank you.
Yeah. Okay, I think we will move on from this now. It was 10 minutes and we've had half an hour, but in saying so, it was good discussion and I think it's giving us some positivity moving forward. So I'll now ask Pete to come in and thank the other gentlemen for their presentation. Very good. Thank you and have a great day.
Thanks, Chair. Ian and Dom, we can let you guys go. Thank you very much.
Thanks. Thank you.
Thank you. Thanks all.
I'm confident, Chair, I can make up the time. So there's 3 more submissions from Deloitte in the papers. Turning you to page 12 of the agenda is the audit fee proposal. So there was a draft proposal put forward, I think, in December. And on the back of that, this committee, I think, came back with 3 things. One is effectively a counter offer, which we accepted, and that's now been approved by the OAG for FY22. So that's dealt with. You also wanted to see a fee proposal for FY23, which we've now included, and there's a proposal document which sort of sets out the logic to that. And the third thing was just, I guess, setting some principles and some guidelines for what happens going forward. So we've outlined there what we think are the correct principles to apply for FY24 and 25. Noting that I won't be around for those because I have to step aside under the rotation rules at the end of this year, as you know, but I'm in a position to obviously commit Deloitte to that approach here and now. So Mr. Chair, I might just revert to Q&A from this point rather than going through the document.
Yeah, thank you, Pete, and very, very pleased with what you've come up with, that counter offer, and it is really, really appreciated. And in saying so, we're going to miss you within this sector. So, any questions here for Peter moving forward on this item? No question? Okay, I'll move that the recommendation be the 3 recommendations be combined, and somebody move that they be accepted.
There's 4.
Thank you, Rick.
There's 4 recommendations.
Oh, absolutely. Sorry. Yeah, I've got this little screen on in front of me. Sorry about that. The 4 recommendations. So moved, Rick, seconded. Looks like Madam Chair, Penny. Thank you. All those in favour? Aye, against, no, carried. Okay, Pete, move on. Thank you.
Thank you very much, and thank you everyone for your support on that matter. Turning now to page 40, this is, I guess, a cyclical piece of work that we've been performing as part of our audit to look at the controls and processes that the district councils have with respect to administering, the rates collection process. So you might recall last year we presented a report on our findings from the Far North District Council. This report picks up Kaipara District Council, which you will have seen. And look, I must apologise. The production of this report has got a couple of errors in it, in the sense a couple of pages were repeated. However, we did send Simon through an update of that, which no doubt he can distribute if he hasn't already.
Yes, we got that. We did get the updates. Thanks very much.
Oh, perfect. Thank you. Look, there were really 2 key recommendations that came out of this, which are very much aligned to what we saw at Far North, actually. So item 1 was that, consistent with the Far North, there just appear to be far too many people at Kaipara Council with access to the rating system. So we're recommending, and Kaipara have agreed, to really button that down, because clearly the more people you have with access, the more opportunity there is for mischief. And then the second recommendation is that when they allocate payments, you guys as Northland Regional Council are effectively second cab off the rank where it's a part payment. So if it's a full payment, no problem. If it's a part payment, they apply that payment to their own rates first and then Northland's rates second. So look, that's something that I think management have proposed to deal with through the services agreement. However, I would just say to you that I think this is going to be somewhat more complex at the Kaipara end, because they'll have to go through a process of engaging with their system provider to actually rewrite the logic on how those payments are allocated. So certainly a good one to get in front of them, but it does feel like there's a bit of work to do at their end before that recommendation can be actioned. So, Mr. Chair, I'll stop there and just see if there's any questions on that report.
Any questions? Bruce, staff?
I can see Stuart's hand up.
Yeah, Rick. Yes, Rick. Yes, Councillor Storwell. Your hand is up.
Stuart was first, but I'm happy to go.
Who was first?
Stuart, but it's all right. It won't be.
I'm blind too. I'm blind.
No, I just wanted to, Pete, thanks for that. I just wanted to, just on that second point, second recommendation.
What page is that, mate?
49. It's the second recommendation, and it's got regarding how we get our money.
Yeah.
And I'm just, hence in the event of a partial payment, the NRC balances will have, I presume will have a proportionately higher balance unallocated. So I'd have to have a think of, I'm not quite sure how that works, so I wouldn't mind an explanation around that.
Yep. So Rick, essentially what happens here is Kaipara Council have got their own rates. There's the current rates, there's the arrears rates, and there's penalties, and you potentially have the same. And the system has a hierarchy for how it allocates a payment. And essentially in that hierarchy, Northland Regional Council comes second to Kaipara. So if there is, let's say there's $100 of Kaipara rates outstanding and $50 of Northland rates outstanding, so 150. The ratepayer pays $100, then that $100 will be allocated to Kaipara's rates, and your amount of 50 will be left outstanding. Whereas our view would be that it should be, fairly allocated in proportion. So if there was a $100 payment came through, then in that situation, 2/3 would go to Kuiper and 1/3 would go to Northland, so that each council has the same proportion outstanding.
Thank you. That's what I was hoping it meant. Thank you. Thanks for that.
Thank you, Rick. I've got 3 hands up here. Stuart, I believe you were up there first.
Oh,
I missed,
yes, just a quick question on that same point that was raised by Rick. I mean, Peter, do you think that it actually requires a reconciliation? Because it sounds to me that if one was looking back, one would see that Kuipera's arrears statistics will be lower than ours in relation to them being first cab off the rank. And are we, does that, if one was looking back over the last year or 2 or 3, are we seeing that actually Northland Regional Council is not receiving the funds it should be receiving, and therefore might be having a disproportionately higher arrears and other statistical information?
Yeah, look, it would be a useful exercise to ask Kuipera to undertake, Stuart. I'm not sure whether you've actually got any rights to claim a true-up, essentially, because I don't think the rating services agreement as currently drafted requires that. So that's something you'll have to put in going forward. But look, certainly, notwithstanding that, a useful exercise to see the quantum of the issue. And then obviously getting the system adjusted at Kuipera's end to get this right going forward would be the primary recommendation.
Thank you.
Thank you. Okay, Penny.
Well, thanks, Colin. Yes, so further on this topic. So we've got 2 other TAs that we that collect rates on our behalf, and I did ask Bruce about this previously, and Bruce, you did say you would look to standardise. So can I take from that we haven't got this agreement with any of our TAs at the moment, and that it's the service agreement that we would use to get it?
Yes, that's right. So we would use the service agreement. So we're looking to modify that in this coming round to include that in all contracts. I still need to follow up further with Far North District Council, because they're in the same situation with the Kuipera District Council on this particular issue, and it comes down a little bit to their software vendors' availability to actually modify their software to accommodate this. So I do need to follow up again further with FNDC to see whether they've made further progress.
Yeah, and just to add, given that it's, I think, Peter, you mentioned that it's not documented anywhere that we should have this right, I guess that's a bit of a concern as well, I would have thought, for other regional councils, perhaps.
Yeah, look, I think it's one you can certainly document through the rate services agreement going forward. It's a good question about other regional councils. I'm not sure, Penny, there's too many other regional councils that operate their rates in this way. I think many of them now have it in-house. I could be wrong on that, but yeah, I'd have to check that through the OAG, but I'm not sure it's a major problem in the sector because of that.
Okay, thank you. And I just to add before anyone asks the questions, we are, Bruce tells me, looking at doing some work on that. So in-house, I mean, yeah. Thank you.
Thank you, Penny. Yes, Malcolm.
Thanks, Chair. I must admit, I was a little bit surprised by this finding, because I do recall us having this discussion with Kuipera, but in the context of the Rogan outstanding, and the quantum of people that refuse to pay their rates. But I'm aware that they were managing that outside of their rating system on spreadsheets. While they had given us an undertaking to make sure we got our fair proportion as those rates came in, it's obviously not translated over into the main rating system. So really pleased that this has been picked up so that we can deal with it going forward.
Thank you, Malcolm. Okay, good discussion there. Any other questions or discussion for Pete? Okay, what I'll do now is somebody move that this report be received. Okay, Rick and I will second that. All those in favour? Aye. Against, no. Carried. Okay, Pete, is that your lot?
I've got one more.
One more, 5.5.
5.5.
Yeah. Thank you, Pete.
So that's page 56 of the agenda. So yeah, look, this report was completed by some colleagues of mine, really in response to a question Danny raised, I think back in September, about the level of maturity of the internal audit function within Northern Regional Council, and of course noting that there isn't really a fully scoped up in-house internal audit function. It's a mixture of work performed, within the organisation plus some outsourcing. So I had my colleagues who sort of live and breathe this stuff spend some time with the relevant people at Northern Regional Council. They reviewed a bunch of the different documents and the like, and then really formed a judgment as to where they saw the organisation from a maturity perspective. So long story short, they're viewing you as developing in terms of maturity. So probably about you'd say you're probably down at the sort of 30% type level if you're going to measure these things between 1 and 100. In saying that, you really have to take into account size and scale of organisation as well. And consistent with what Ian mentioned with respect to the fraud and corruption work, it is pleasing to see you are doing something. Many others are not doing anything. However, the stuff that you are doing, I guess, is somewhat bound and limited by the amount of resource that you're prepared to put in this area. So, for the amount of resource that you're currently prepared to dedicate to internal audit, this is where you land. If you wanted to, go further down the continuum towards a more defined or mature internal audit function, then there's no doubt it's going to take more resources. So it's really a cost benefit decision at the end of the day that management and council need to make.
Pete, is that not being at 30%, and is that a risk to us?
Well, it's a risk in the sense you could always do more, Mr. Chair, but I think you need to really stand back and look at the cost benefit. You could probably make some inroads with some of their recommendations by changing things structurally. So I guess maybe having more of the work done at a strategic sort of risk level rather than a compliance risk level, that might inch you along. Having, more of the executive leadership team time sort of focused on directing, where to look, that would inch you along a bit. But to really make big inroads, you have to spend more. And so you need to sort of weigh up that against the risks. Look, my view for an organisation in terms of size and scale is that it's not a massive risk by not doing more.
Yeah. Thank you. Thanks, Pete. Pete, is that have you finished that presentation, or can I open up for questions now?
Yes, please.
Yeah. Okay. Stuart.
Oh, thank you. Thanks, Toss. I did have a conversation with Peter about this a day or so ago, and because we sort of talked about the materiality, and I think that Peter's articulated that really, really well in his just more recent comment. But I guess what I'd like to ask is, how many touch points, given that we already are externally audited as an organisation, how many touch points are effectively covered by our external audit? And is that perhaps a way forward is to try to pick up on the material areas that don't get effectively touched by the external audit in that kind of profile that Peter was just talking about in terms of determining, the risk reward around internal audit process and maturity.
And Stuart, I think that's one of the recommendations from my colleagues, is that you potentially get more bang from your buck, if you like, by directing internal audit reviews to those more strategic risks rather than the compliance aspects.
Yeah.
The scope of an external audit, as you know, is different to an internal audit, but there is an element of work that we do as external auditors on internal controls, but we are very focused on the financial controls. So we're looking at, controls and processes around expenditure, revenue streams, payroll, that type of stuff. So yeah, whilst we can't say we cover it from an external audit point of view, there is a touch point there, to your point, for sure.
Okay, thanks for that. Malcolm.
Yeah, Chair, I'm afraid I've actually got some serious concerns with this report. Because firstly, I mean, when I read it, I was extremely disappointed in the findings. But as I reflected on it more, I'm actually concerned that they haven't done a deep enough dive into the organisation to understand what we do, and would actually like to see this not remain on the record, but it be reviewed before we accept it, because particularly if I look at the insights and recommendations, the second recommendation on critical assessment of NRC key risks, and it says NRC has not taken steps to critically assess or examine the key risks and how they appropriate mitigate and treat them. And then you compare that to the risk assessment and report that's on this agenda. And I just find it difficult to reconcile those two statements. And then going down to point 3, adoption of risk-based approach, says NRC's current IA function, the limited consultation and input from the executive leadership team. And I'm sorry, but that is just factually incorrect. So I have a real problem with this remaining on the record because I don't think it in any way reflects the current state of play in the organisation. I'm very happy to acknowledge and accept that there's always room for further improvement, and this is an area that we can and should keep improving on. But to have a report on and accept a report that essentially marks us at such a low rate, I have real concern.
Malcolm, it's not a mark per se. It's an assessment of maturity. So maybe I've used the wrong term by describing it as 30%. So an organisation that had its own sort of fully scoped internal audit team, with 3 or 4 people, direct lines of reporting to a committee such as this, focused on strategic risk, etc., would be a much more mature rating, effectively. So this is really about assessing where you're at based on resources spent. There's also, I guess, an element of this which, depending on who they've spoken to, it wasn't a deep dive. It was a desktop review. So I think they clearly haven't spoken to you, Bruce. They would have spoken to you, and they will have reviewed a bunch of documentation. So whoever they've spoken to and whatever they've looked at has led to this outcome. If there's things been missed, we can certainly put those things in front of them to see if that would change the outcome.
Yeah, Peter, I'd like to ask that we do that because, so it's not only just myself, but I'd be keen to understand to what extent Stuart and Danny have been spoken to in understanding this as, our process, because I think our independent advisors is a critical part of the structure that we've put in place to deal with all of this. But, one of the, and I mean, the percentage, quite honestly, means nothing to me. I'm not concerned whether it's 30%, 50%, or 70%. What is a concern to me is the consequential effect of a report like this. If we were to possibly have an accident or something and there was a health and safety Review and WorkSafe came in and they saw a report like this that said, you don't even critically assess your risks. You know, you've had someone seriously injured or killed on the job, and as the chief executive and senior executive team, you know, you had this warning and you've done nothing to change. So it's that consequential effect of saying that we don't do robust risk assessments, and how that might be interpreted in a different situation, that sort of really rings alarm bells for me.
Thank you, Malcolm, and I'll let Penny comment, and then from that we'll get an action moving forward on this one. Thank you. Yes, Penny.
Thank you, Colin. Yeah, I would like to add my support to Malcolm's comments. There were a couple of the questions that I had already asked, and I think I thought we'd already done a lot of work on this already, and the answer was yes, we have, and that was back from Bruce. And also I did ask the question, were Stuart and Danny one of the stakeholders that were consulted, and part of it, and the answer was no. So a couple of question marks for me. So I'm fully supportive of what Malcolm's asking, not to take anything away from Deloitte's, but yeah, I think there's perhaps some things that are missing here. Kia ora.
Thank you, Penny. Just moving forward on this, the recommendation 1, that the report investment policy revision incorporated protocols for reporting investment fund gains by Simon finance manager be received. So we will receive the report, and just moving it forward, that the subcommittee, well, we haven't endorsed at this stage that maybe that the Deloitte's sit down with the CEO and Bruce to make changes, or yeah, I'm looking for some guidance here, team.
Yeah, Chair, if I may, I mean, I would prefer if we changed received to noted, just because I think received does send a message of some degree of acceptance.
Yes.
But then to add a bit asking that it, you know, be further reviewed. And I mean, I do this because I think this is really important to get right. You know, I think the level of I mean, it's one of the things that I've sort of tried to promote long and hard within the executive team is our level of internal auditing and the reporting that we do, because I think it is critical for the organisation to have a really robust internal audit program. You know, and if we've got a long way to go, that's fine. I'm quite happy for us to be told that and to see, you know, and get recommendations of how we can do better. But I just want us to make sure that this point that we start from is a fair and accurate reflection of where we're at.
Yep. Okay. I'll before we come up with some words there, maybe you, Bruce, or Judy, that the recommendation. I'll just go back to Penny and then to Rick. Thank you, Penny.
Thanks, Toss. Not to argue with Malcolm, but my recommendation would be that we don't receive the report, that it lays on the table pending review or further work done on it. I don't see how we can receive it today, or even we could note it, but I think that maybe doesn't send the correct message as well.
Malcolm has got his thumbs up there, so I'll just listen to Rick now, and then we'll go from there. Thank you, Penny. Yes, Rick.
Yep, happy to. That's a great idea, Penny. Happy to support that. I do think that these issues are, and this probably is a classic, that it's arisen because we aren't if you like, visiting, that Deloitte's aren't visiting. We're not in the same room. No, we're doing it all by Zoom. So I really think, glad that it's coming to an end. And I'm sure if there was a sort of mismatch somewhere, I'm sure it will be nutted out very soon. So, you know, I mean, it's just one of those things, isn't it? It's a mismatch for some reason, missed a couple of people, and I think sign of the times, and let's nut it out. We're all back, hopefully, and can meet and visit, which I think will be much better. Thank you.
Thank you. And yeah, Pete, I don't think we've, it's not that we're, what's the word? We accept the work you've done and do appreciate it, and it's not a criticism at all. So it's everyone. Could I just move a motion that this item be left on the table? Or Rick, you moving that? Seconder, Penny, all those in favour? Aye. Against, no, carried. Okay, thanks very much. Now, Pete, do you want a quick sum up?
Yeah, thank you, Mr. Chair. Look, all those points noted. Bruce, I'll work through you to get our people to sort of revisit some of this, particularly with you, Malcolm. I think probably it would require some time, Danny, with you and you as well, Stuart, just to get the independent perspective. And then for me, it feels like some of the words, I was just reading some of the recommendations when you were talking before, Malcolm, and probably tightening them up. I think we're not necessarily saying you don't consider the key risks. I think the point we're trying to make, but the words need to be tightened, is linking those key risks to internal audit assignments effectively. And that's probably the point that we need to make and tighten up on to get you sort of further along that maturity assessment, rather than not looking at the key risks, because we know that's not correct. I mean, I've seen those risk assessments myself come through come through these agendas. So combination, I think, of extending the discussion and tightening up the wording, and we'll get this sorted for the next meeting.
Thank you very much, Pete. Danny, your hand up.
Yeah, it's just probably more something to Peter that you identified as well, and that's that kind of the overlap or the gap is between maybe the audit function internally and the work program that NRC has in place, but also the external aspect. I think it'd be very useful if at least there is some work maybe between yourself and Bruce in terms of mapping that out. It's always useful for whether it be a subcommittee or if not governance itself to be able to see that graphically in terms of and I've done it for other organisations as well, so that the audit and risk committee is able to see what the work program looks in terms of external and internal audit functions. So you've got the overview, so that you've got that clarity.
Yeah, understood.
Okay, I think we'll end this session with you, Peter, on that note, and thank you so much indeed for giving up your time, you and your staff today. A very positive and constructive work that's going on. So thank you so much, and wishing you the best. But you're still part of us at this stage?
Yes, I am. I have one more year to go, Mr. Chair.
Oh, okay.
So you'll be seeing me for the last time in, I think, September at the meeting to sign off the accounts for June 2022.
Beautiful. Okay, and we really look forward to working in collaboration alongside you. So, yeah, all the best. Thank you, Peter.
Okay, thanks everyone.
You are welcome to stay on if you want to.
No, I might dial off. Yeah, I'll leave you to it. Thank you.
Yeah, I know you are a very busy man. So thanks so much.
Thanks.
Thanks.
Okay, team. We'll now move on. We're doing pretty well here, I feel. We're about halfway through our allocated time. We've got up to 12:30, so we finished between 12 and 12:30. Very happy and ready for Rick's meeting this afternoon. Right, I'll now move on to item 5.6, page 64, investment policy revision, incorporate protocols for reporting investment fund gains losses. Who's leading this one there, Bruce?
Simon, do you want to have a you want to do a bit of an overview of this paper?
Yep, I can quickly summarise if you like.
Marina, Simon.
Kia ora, Chair.
Nice to have you on board.
Thank you. Yes, so this paper sets out how we account for and how we report our managed fund gains, and how these gains or losses affect the bottom line, or what I've called in the report our general funding. It's quite long and wordy and a little bit technical, but I think I can summarise it in 4 bullet points. So number 1, when we have gains, positive gains, then by adjusting the transfer to reserve or by utilising transfer from the OPEX reserve if we need it, we keep the actual bottom line in line with the budget and there's no impact or no variance. So that's when we have positive gains. If we incur losses during the year, and these are non-cashed or non-crystallised losses, remember, we do take that impact to the bottom line, and we do that so councillors can see and be aware of the impact of our managed funds and the losses we're incurring, and the impact these losses have on our overall monthly bottom line or general funding. Now, in saying that, they are non-crystallised. So at the end of the year, when we present our financial operating result at the end of the year, we do so on a cash basis, and so these losses, if they are still there at the end of the year, we back them out. We back them out, and we do that by a transfer of historical gains on paper. So that's the 3 sort of treatments. The other point to note in this paper is that if we do use a transfer from the OPEX reserve, if we need to take money from the OPEX reserve to substitute the lack of funding we haven't got because we've had lower gains or losses, then we've reduced the balance of the OPEX reserve. And that means we've got less money available to use in the future. So there would be, in that case, a need to make decisions about how to reinstate the OPEX reserves balance so that it matches the requirement, i.e. like in 2022, 23, if we use some this year and the balance goes below 2 million, we would have to reinstate that to 2 million to be in line with next year's requirement. So that's the 4 points that I think summarise my paper, but I'm happy to take questions if anyone needs clarification.
Yes, thanks for that, Simon. I just got one I just don't understand. You did explain, but non-crystallised again. What?
Yeah. So when we say losses, it's not that we've physically lost money. It means the value of the fund has gone down. It was valued last month at a market price of 100, and this month it's valued at a market price of 80. But we haven't physically lost that $20. It could come back up to 120, which is done in the last 2 years. So when I say non-crystallised, I probably mean non-cash. They're non-cash losses.
Okay, thanks for that, Simon. I've got some hands up here and couple from our financial gurus here, so I'll go to you, Rick, first.
Thanks, Simon. I know you've explained this to me a few times. I'm not sure if we've explained it to the whole council. I think we have to the whole council. Can't remember, but I think it is a good, if you like, a bullet point that we could do this again to the whole council to explain this, and that's a very brief summary, so it would be good to explain the gains and losses. And also, I particularly on point 2B, capital losses, where it says throughout the year, the negative impact will be reflected in council's net result. It will not be booked in the monthly accounts, and I think that's important. So I just think it's important to, and I know Jonathan will push this afternoon, that you know, we are expecting negative at the moment, and it's important that we balance it out over more than a month, a quarter, or a year. We've got to think about that the long term and not panic. But I think my point is that I think it'll be quite good to talk to the other. I think there's, just trying to think who's here. There's 4 of us here, so there's 5 that aren't here. So, or 4 that aren't here. Be quite good as a little, you know, timely reminder, really. Thank you.
Yes. Yep. Okay. Thank you.
Thank you, Rick, for those wise words. Yep. Okay, Stuart.
Thank you, Toss. And look, reiterate and totally support what Rick has just said. And look, Simon, this was really great. And I think it was a good articulate way of being able to, you know, get council to visualise what happens with the investment funds over time. What I like about it is that it's showing that we have the ability to meet the community and social based objectives on an intergenerationally fair basis, in keeping with the fact that our investment funds, especially our externally managed investment funds, are also managed on an intergenerational basis. And the whole point of those funds are over time to, you know, and I use that expression of mine of putting hay in the hay barn for a rainy day. You know, this is the rainy day. And this is why you have these funds available. And in some respects, in talking about OPEX and the OPEX fund and the way that, you know, that OPEX fund can be, or the reserve can be topped up from time to time. The one thing that I don't think is something that we want to be thinking about too readily is that you would fund the deficit from increasing rate revenue, because that's actually not an intergenerationally fair or socially equitable solution to the sum of the parts. And so I'm going to suggest for a conversation later, and it might not be with this committee, but certainly with the Property and Investment Committee, that what Simon has talked about in terms of taking the difference between our budget returns and actual returns on an annual basis, and actually having the difference, having it actually increased to the difference between actual and our target, or what we usually call our benchmark returns over time. And if we think that these funds go into they go into 4 different reserves. I mean, it's not just the OPEX reserve that gets topped up. You know, we've got the Reg EC, we've got the RPR, we've got the PRF. Now, in a way, it's almost like there's a centre point, or you could call it a transitional reserve that then allocates out to all of these. And I think that what Simon's done is a really fantastic step towards us visualising the way this works. And I would like to go further, that maybe we investigate a way that we can bring it all together and centralise it, and maybe reassess the way that we take and support these reserves for the rainy days that they're there for, by considering a different approach to measurement.
Yep. Thank you, Stuart, for those wise words, and I do hope that rainy day does come soon. The other thing is, we could do more work on that, so I'm sure we can put that as a bring up with Bruce and the team moving forward for future discussion. Now, Malcolm.
Yeah, thanks, Jake. And just like Stuart, want to acknowledge the work that Simon's been doing on this. I think this is an important step forward in terms of the maturity of our thinking around these funds. So just like to make some suggestions, Simon, because I think this is very much a sort of work in progress that we keep moving on. So on page 66, clause E, I just wonder if that would tighten up a little bit if we reflected in there that we do this reconciliation at the end of the financial year as at 30th of June. It's not a rolling assessment.
Yep.
And then for F, the issue there is it's where councillors determine that a reserve should seek to maintain its real value, that the inflationary pressures then mean that we need to put some funds away, or have I misunderstood what you're trying to say?
No, that's exactly what I'm trying to say.
Yeah. So maybe if we could just expand the explanation as to which funds and when we would apply F would be valuable. Then moving on to the capital reserves, I just think we need to do a little bit more thinking about this, because and I know we've spent quite a lot of time scratching our heads on this one already, but I'm just struggling a little bit with the difference in that in the one case we're landing up not topping it up, and the other case we are. Is it just because the ones at the end of the year and the other ones during the year, or is something else?
Yeah, it's just when we get to the end of the year, I'm trying to keep it out of, we try to get our cash result, down to that $40,000-$50,000 vicinity. And if we have these, for example, if we do have some big losses, it's just going to distort that bottom line on a non-cash basis.
And I suppose then the question that comes to mind for me then in C, Simon, is how far back are we prepared to go to transfer from reserves? And because in theory, at least, you could keep transferring till your equity got to naught. And I think you've got to signal that there's a problem long before we get there. So I think we've just got to go away and keep doing a little bit of thinking, or more thinking about the definition of the amount of reserve that is available to transfer to fill that gap should it occur.
Yeah, I must admit, I was thinking historical gains.
Yeah, but historical, how far back again? Because if you go back far enough, you get to 1989, and presumably it's $1 million or whatever the council was initially established with, and I think that's too far back. So, and I don't want to waste a lot of time with the committee here. I think we need to take this away and think about it some more. But we should, the last 3 years or the last 5 years or something should be the maximum amount that can get transferred. Because if we, for example, had a 1930s crash and the markets went down 40 or 50%, that in fact needs to be shown. You don't want to sort of cover that or seem to cover it up by transferring, reserves for the last decade or right back to the beginning of the funds or whatever the case is. So I think there's just a little bit more thinking that we've got to do and come back to the committee with some thoughts around that. But I mean, some thoughts from the committee and particularly our independent advisors would be helpful, because we're moving into territory here that I suspect few councils have ever moved into.
Yep. Thank you, Malcolm. And just moving forward with this, what I'd like to do is just put that recommendation that we received the report, and that we go back, Simon, Bruce and the CEO, the team go back with some minor tweaks there and report back. So everyone happy with that if I move that? Yeah. All right. Are you second that, Rick?
Yes, yep. I am.
Okay. All those in favour? Aye. Against, no? Carried. Thank you, team. And thank you, Simon, for the great work you're doing. I'd just like to endorse what CEO said. Yeah, you and your team are doing a great job here, and we're very, very pleased as an organisation to have you on board. Okay, so we're moving on now to item 5.7, page 68, Local Government Funding Agency, presentation of funding strategy consideration. So, Brucey, are you talking on this one, or you again?
I can lead if you want, Bruce.
You go for it, Simon.
Yep. Yes, so thanks, Chair. So the main message in this report is that times are changing. There's a current environment of high inflation, increasing borrowing costs, or interest rates, and very uncertain investment returns out there. And so what I'm saying is that it may not be too far in the future that it becomes prudent to start considering using cash or council's internal cash reserves to fund projects, and then recovering an opportunity cost with it, as opposed to continuing with the current strategy of going to the LGFA and borrowing. So it's not here yet, but it could flip over. Externally borrowed could flip over to it's more prudent to for us and for the ratepayer to use internal cash reserves. The flow diagram, I must admit, is a bit of a work in progress too, and I haven't had a good chance to road test this with the CEO and Bruce. But what I'm trying to do with the flow diagram is just set out a step-by-step sort of consideration of the factors that you need to think about when electing a funding strategy. So sort of similar to that last paper, I would like the opportunity to take the flow diagram away with any suggestions that come out of from the councillors and fine tune it a bit. So yeah, kia ora, that's this paper.
Yeah, thank you, Simon. Yeah, and looking at those graphs, they not really good reading, some of them there, but I think this topic is sort of, it goes in hand with your committee, Rick, with you and Jonathan and whatever. Yeah,
sure
so
does.
Have you got any comments here, Rick? I'll just open up to you first.
Simon,
Sorry to put you on the spot.
I'm sure, no. I was going to ask, but I'm sure Malcolm will have a lot to say on this, and Jonathan as well when we present it to him sometime. But I guess it's got to be like for like, and I'm sure I don't know if this has been in the pipeline in the past. It probably has in the background, but it hasn't come to the fore, obviously, because there hasn't been a situation. So I'd be very keen to know that, Simon, what sort of thinking went on in the past. Personally, the time frame is important. You've got 3 years there for the long-term fund, and so I'm very keen. Obviously, your diagram is just a sort of work in progress because I see a few gaps in it. I'm interested in the sort of, since the fund was inceptualized, 2000, and when Malcolm came on, 2012 or 10, was it? 2010. So I think we should be going back at least that far and perhaps further, and be very keen on Malcolm's thoughts, but obviously I'd be very keen on Jonathan's, but I know Stuart will have some comment on this as well. But I think it's got to be like for like, and I don't see it in that diagram as really like for like at the moment. Thank you.
Thank you, Rick. Amy.
Good, Chair. Thank you. Thank you, Simon. Just at a really high level, I think for myself, I think there's value in a broader conversation, and it relates to the last item as well. Just as we look ahead to sort of these times of financial uncertainty in the global context. And yeah, kind of just listening to Stuart talking about, you know, intergenerational equity and things like that, I would be interested in a conversation just around our funding strategy and our approach to finances generally with that intergenerational lens. And, you know, we're talking about a rainy day, and it's so good the work that's been done up until now to put us in a good position to be resilient in these times. But I guess the question on my mind is, how rainy will it be next year and the year after and the year after? So just yeah, I would like to talk more about how we have a really sustainable long-term strategy that looks at what, you know, the next generation might need in terms of resources in this space too. So I think Rick mentioned he'd be keen to workshop it more broadly, the previous item. So I guess that potentially could be part of the discussion in that workshop if that comes to pass. Thank you.
Thank you, Amy, looking at through your lens here, and good comment there. Yeah. Stuart, did you have your hand up?
Yeah, thank you. And look, and thank you, Amy and Rick. I mean, I 100% agree that this is a really great start to us looking at a workshop that looks at pulling it all together. Look, the messaging that I'm giving at the moment and that I'm seeing out there with New Zealand companies, councils, government and other bodies is that the world has changed in relation to how we view capital, and capital in terms of its use, its returns, and it's with an eye to resilience, and it's with an eye to nimbleness. And it's factoring a lot of qualitative things now that we've never had to understand in the past. And we talk about these as being ESG. This is all the environmental impacts, from climate change to carbon emissions to your social, which is including co-partnership and co-governance and Māoridom and other community-based objectives and governance. Now, it's really pointing to a different way people will view capital and what it means against the old traditional, you know, weighted average return on capital and all the other types of ways that we think of it. And that's going to absolutely influence funding strategy. And I think that what Simon's done is a really great start, because you've got to have a starting point, folks, and you've got to have something that's visual. And I think it's a really great way to be able to workshop so that one can see the trade-offs between intergenerational and short-term P&L, i.e. balance sheet versus profit and loss. And it's the way this is all shifting and changing. So I totally support. Thanks, Simon. A really great way to start and engage this, I think, fundamentally important topic that needs workshopping.
Thank you, Stuart. And I'm sure those will be taken on board by the team. We got any other comments here? Yes.
Yeah, Chair, if I may really just follow up on Stuart's comments. I think part of the importance of this paper is to really just again bring home to councillors that as I see it, we're at an inflection point where the strategies of the last 6, 8, 10 years are not going to be the same strategies that have to be applied over the period going forward in terms of financing. And some of the big changes that you'll all be aware of is inflation is suddenly in a very different place to what we've operated under over the recent term. Interest rates from these reports appear to be going to a place that is quite different to the sort of rates that we've become used to. And as a result of that, the way in which we consider how we fund projects between borrowing money and using our own internal capital needs to change as well. So as with Stuart, I think that this is about starting that conversation about how we change, how we develop a new strategy that will last the council out for as long as this next phase of the cycle takes place. Because we've been in a long period of pretty well constant growth, you know, and a sort of positive phase of the cycle. Now, how long and how sharp the downturn's going to be is anyone's guess, but we can't just keep doing the same things the same way, because everything has changed around us.
Yes, thank you, Malcolm, and very wise words. Yeah, we are in a changing environment, especially within the financial state. So, with any other comment? If not, I'll somebody move that, or I'll move that recommendation be received. Yeah, second. Penny. All those in favour? Oh, have you got a comment, Penny? Sorry.
Yeah, just a quick one, Toss, and what I agree with what's being said. You know, things could change back quite quickly as well, but I'm happy enough to workshop it. My suggestion would be that we work with the investment and property subcommittee as well to get this workshop, and it's probably quite the same people, but I think it would be a good paper to bring to the IMP subcommittee as well. Yeah, but some good comments. I see a conflict between resilience and being nimble, Stuart, but we'll give it a go. Yeah, and I think we have had a long-term strategy that has served us well in the past. So it's not as if we haven't had a long-term one. But I would just a bit of caution. Like, we don't want to rush out and change things too much. We do need to take a measured approach to this. So that's it for me.
Okay, thank you, and for those wise words. And yeah, you know, I think it's as I alluded to previously, it's about both this committee and Rick's committee working in collaboration on this. So thanks, Rick, for that. So all those in favour, aye. Against, no. Carried. Rightio, moving forward, we item 6.8, page 86, risk management activity update. Very, very large and comprehensive report here. Kim, are you going to? Hi, Kim. How are you?
I'm good, thank you.
Good to see you on board. So I'll leave it to you to do the initial report on this. Thank you.
Okay, then. So this report covers our risk update over our activity in the corporate risk sector for the last quarter. It details in Table 1 our 10 top corporate risks for that quarter and the trending that was associated with them. In Table 2, there's some additions and changes. My apologies, I meant to delete the water item off there because we never actually landed that fully before the end, the reporting time frame, and we're still developing that piece. And then it goes on and presents the risk management policy and framework, which really had some additions in it around some roles and responsibilities within that line up with our new operating structure to include our deputy leadership team. And the inclusion of an extension into program risks. So currently our current risk management framework only included the project risks in there, so we extended it out to the program area and some objective reviews that were in there. Okay, then when the risk appetite piece is talking about, we did a risk maturity matrix exercise some time ago now, and one of the pieces that was needed to be done in there was an investigation into risk appetite, and we were going to have a look at, we don't actually have the resource internally to do that, so we were going to look at some options around that and report back to you at the next Audit and Risk Committee. Obviously, there's also some deep dives scheduled, and there's one presented in a separate agenda item.
Yep, thank you, Kim. Kim, I'm going to open up to the floor now, and I'm just looking at this extreme risk here, and one of the high one, the failure to respond to COVID-19 impact. Can you just drill down into that a bit? You believe us as an organisation did not respond, or I think we're doing pretty well as an organisation within this COVID situation we have. Am I misreading something here, or?
Bruce, do you want to comment on that one?
Look, I don't think the intention there is to say that we've failed. In fact, I think we've done exceptionally well in our COVID response to date. I think it's a risk of failure of not responding, but we've put in place business continuity planning. We've put in place arrangements to ensure people work separately, work from home. We've got backup resources in place if necessary, and we've done a suite of other measures. So I think the Omicron trend has increased the risk because it's a new variant and it's been spreading rapidly, but we've put in place good measures to ensure that we can maintain business. So look, that risk is probably declining as we speak, but at the present time it is what it is in the report that was prepared probably several weeks ago.
Yeah, okay. I think you've been a bit hard on yourselves.
But I can assure the committee we've put in place really good measures to manage this pandemic.
Sure. Yeah. Okay. Any other comments? Very, very good report, and the reporting. Looking back over 12 months, we've come a long way in this space. So well done, Amy.
Thank you. Just a really quick comment just on the policy and those drafted changes. I just wanted to speak in support of the Deputy General Manager's role stepping up into the risk management leadership space. I think that's really beneficial for the organisation. I think it will really grow the capacity for management to be across risk, because it is a headspace thing, and so I think that's really great. And I also see it as a really good opportunity for those individuals in those roles to grow into that as a skill set, which will then benefit them as individuals in their professional development, but really, really good for the organisation. So just really support that. Thank you.
Thank you, Amy. Malcolm.
Thanks, Chair. If I could just ask the team if we could just go back and review item 5 on page 93, because I think that for all the reasons that we've been discussing for most of today's meeting, we're facing a sort of rapidly ratcheting up of risk in the investment portfolio space. So if we could just review that when we do our next round of reviews.
Yeah, good point, Malcolm. Yeah, okay. Any further comments? Yes, Penny.
Thank you, Toss. Yeah, that was one of my questions too, given our last conversation. But I'll leave that there. So on page 105, where it talks about roles and responsibilities, roles and behaviours, and councillors, and to a lesser extent the Audit and Risk Subcommittee. I'm just wondering if that's enough, because all it does is talk about our vision, mission, and community outcomes. I would have thought we'd be considering risk more often than just when we review those things. But looking to maybe Danny here, if what he may give to that. And just before I go to Danny, how do we, one of my other questions was, I think this is a really important report, and how do we get it to other councillors? Maybe we just suggest they read it or something. I'm open to some suggestions there. Because I think risk is one of my things that I think all councillors need to know about, not just the subcommittee. Yeah. Thanks.
Absolutely. Thanks, Penny. Danny.
Chair, it's probably partly a response to Penny's question as well, is around, I just wonder about the merit or the utility in disaggregating the corporate risk into governance, just because we're rolling management and the organisation and the governance risk, and that probably feeds more into that question around risk appetite and the setting of the priorities from a governance perspective, and that we're being clear around the strategic risks of the organisation as seen by councillors. And look, they may well align with management. I just think my preference would be, particularly when it comes into the policy aspect, that councillors will have a different view or perspective on risk in terms of the region, and it's then how that works in with the organisation's risk, because it's still one organisation. It's just the priorities and view of councillors in terms of governance, and disaggregating that from the corporate risk being more the management. And it may just be terminology, Kim, but I just prefer that we separate them out, that we're clear around council's view of risk in terms of priorities and how that's, and I don't want to create more work. It's already that it's there. It's more that how we identify it, and then likewise how it relates to the appetite of the organisation through a strategic lens. That's the appetite of our councillors. And in terms of, we have gone through a brief exercise around what it looks like, whether it be the 1 to 10 or the top 5, and that feeds into our strategic aspect versus the more the management corporate aspect, as I would see it. So it's kind of the first part. And I guess that then means the lens and how we look at the policy, it's still a management policy. However, the aspect of risk and how it relates to the whole of the organisation is still factoring the governance as well as the management and whole of organisation risk and its view.
Yep. Thank you, Danny. Yeah, I the workshop we did have with under your jurisdiction there, and yes, this is a very, very important part of being a councillor, is understanding the risk and that sort of thing. So I agree with you, Penny, that we need to bring it back to our councillors, and maybe it's time to have another. I know workshops, it's pretty difficult to fit them in, but I think we've still got to keep this to the fore with our elected members. However, that's food for thought at the moment. Rick.
No, look, I just want to, get some backup, Danny. I think I want to back up Danny and get some clarification on it. I do feel, being on audit and risk last time, that the governance has less sway on these, and I'm talking about the roles. I'm talking about the residual inherent pointing system. I feel we have less input this time, and I think that's good. To be honest, I think that's good. And I'm just trying to clarify if that's what you're saying, Danny, that we need the balance of management and governance. But to me, I guess our experience in it is obviously less than management, but our views are just as important. But I feel that the program should be set by management, and we should comment on it, but not have, how am I trying to put it? Not, unless there's a compelling reason, not change it too much. And I think that's what you're saying, Danny, is it, or am I wrong there?
Yeah, Rick, it's probably more that doing it quarter by quarter, you kind of lose the continuity. Like for me, it's councillors have a view of the region, and that doesn't need to be an onerous task in terms of reviewing the risks as governance, you know, or as councillors and how you see that. It's probably more, it's like an environmental scan, that you as councillors are actually looking at the inherent risks and the residual risks as an exercise. And it's something, Penny, that I would suggest that you lead, and maybe with Malcolm, and that you have, it's really just it's a 5-10 minute exercise. Has our world changed? If it has, great. If it hasn't, then it's a conversation with management in terms of our assessment of risk for the organisation. That's an ongoing thing that should happen at the beginning of every audit risk meeting.
Okay. Thank you.
Thank you, Danny. So just any other comments? Is it thought that we should have a full report back to councillors on this one? Madam Chair, Penny?
Yeah, thanks, Councillor. I think Malcolm and I can, and perhaps Danny as well, can do some more thinking on this. We'll take it offline and in some shape or form we'll bring it back to all councillors. Yeah, happy to do that. It
can be an action point, yeah. Thank you for that. Okay, team. I'll just somebody move that report be received. Thank you, Rick, and second, thank you, Amy. All those in favour? Aye, against, no, carried. Rightio, we're moving along quite nicely here. We'll now go on to item 6.9, page 116. Risk deep dive of workload and capability of operational capacity to manage events and directives. So, Kim, is that you again, love?
Yep, that's me again.
Good.
So we did a deep dive into these two risks, and we amalgamated them up together because so much of it overlaps. So this report sets out what the potential causes were and the mitigation treatments that we have come up with and are working along with programs of work to get through. So the recommendations in it are that we comply and resource the treatment options. We ensure that proper project management before we commit to directives from central government, councillors and other funding sources. And we ensure our long-term strategic and annual planning processes include frequent high-level analysis of capacity and support impacts that are adhered to and championed by ELT. So I've got to say.
Kim, we lost you. You there, Kimmy?
Yeah, I'm here.
Oh, we lost you there.
Oh, did you?
Yeah. Okay. The last about, you would have done about 10 sentences. So if you go back 10 sentences and start, okay, yeah. So you're all happy there, Kim?
Yep, I'm happy.
Yep. Okay. Just before opening up, team, I'm just looking at the potential causes. These risks include, the one is high workload from councillors, and that's one I'm sure Penny, our chair, has been very conscious of that, and as our lead, she is keeps reminding us it's all very well. We want this, we want this, and we want this. We want to report on this, but it is putting extra work on staff, for doing it. And so I'd like to say that I'd like to see that one. Us as a group have made progress on that. You might be able to speak to that, Pen.
Yeah, thank you, Colin. Yeah, certainly I think councillors are all aware of that, and I do keep reminding them On page 117, I do see that councillors have been left off that list, but I think it was an oversight, not an intentional thing to do, because we're very much part of that. Yeah, I just had, and thank you, Toss, I will keep reminding councillors.
Sure.
Are we going to questions?
Yeah, we do indeed. Thank you.
So just in those recommendations, Kim, there's no limitations or constraints mentioned, just ways that, or things that we need to do. Is that something we needed to have in there?
The limitations and constraints will come out as we work through putting the work streams in place around all of these mitigations, and that we will take back to ELT as we need to.
Yeah. Okay. Yeah, because they're good recommendations. Happy with them. And I do understand that there will be some workshopping or papers coming to council laws. So thank you.
I see this as a living document. We've got this here now, and actions will come out of this. So I'm sure within this committee we will have reports. Well, not more work, but reports coming on a month or 2 monthly basis, whatever. And some of these things will drop off the list here, like increased COVID workload that may in time will go, and so on and so forth. So, Bruce.
Thanks. Thanks, Chair. This is a good report in terms of it covers a wide range of the issues. I mean, workload is one of the top items that arises in the stress surveys. It's a continuing theme for the organisation. So the leadership team is doing some work to further drill down on what the issues are, and each group will be compiling a list of what could we stop, defer, pause, is it a high or low political risk, looking at those different options in terms of managing workload, and we'll be bringing that back to council to work with council on defining what it is we can actually do that's tangible to make a change to the issue of workload and the impact that has on the stress level of staff. So we are committed to doing that, and that'll be coming back to you in the not too distant future.
Yep. Thank you, Bruce. Yep. Stuart.
And just to add to that, I mean, in terms of workload, and I'm not sure how far you differentiated this in your review, folks, but certainly the message I'm getting from local government that I'm involved with outside of Northland Regional Council is that the increased workload on staff from central government, and that is in particular to responding to fundamentally massive shifts and changes, the Three Waters, the local government reform, the RMA reform, and that is in the smaller councils, district councils that I work with, they just cannot afford the staff time to even respond to some of these requirements. And they're not, and their big comment is to say, hey, we're not being resourced by central government to being able to provide good responses to these three really big reforms. And I know that probably dovetails into the pressures that staff get from councillors, because in a sense, councillors are themselves responding to those central government demands.
Yep. Thank you, Stuart. Okay, Amy.
Good, thank you, Toss. Thank you, Bruce and Kim. Really good piece of work. And understandably, because it's a big challenge, a lot of those I really support the treatments that are set out in the report, and but interested to see that a lot of them, they actually require more work before they can give effect. So treating the workload issue as a workload issue in itself, which is a real challenge for you guys. So just support you in trying to make progress on this amongst all the other things. And I just wanted to speak in support of treatment number 5, which is the one that I can see, which is really the the short-term and immediate tool that we have, and that's managers working with individual staff to talk about their issues and overcome them. And so, yeah, I can see it's a big thing for us to tackle, and it does need big long-term sort of system and process solutions, but there's also that immediate issue that we're grappling with. So just really want to give my support to the team and the managers to have those conversations with their staff so they can feel heard, and we can try and find some immediate relief for that what is such a big challenge for us right now. So thank you.
Yeah, thank you, Amy. Yeah, any other comment here? A great lot of work going on there, and as I say, it is a living document, and some of the points have been highlighted, so we just got to be conscious of them, and work collaboratively together. And if us as elected members can be of any assistance, we are there to help your staff, who we all love so much. They do a great job and whatever, and we are here to help and not to hinder. So thank you. Okay, so I'll now put that motion. All those in favour of this report? Aye. Rick seconded. Penny. All those in favour? Aye. Okay, it's no carried. Right, we're now moving on to item 6.10, page 121, health and safety update. So a lot of these things, these reports are sort of how do I dovetail into each other. So, Beryl.
Kia ora.
Kia ora, Beryl. How are you?
Good, thank you.
Good to see you there in this fine day. So,
it's beautiful.
Would you like to talk to the report? Thank you, Beryl.
Right. I won't necessarily go through the report because I presume that everybody's had an opportunity to read it. Slight update. We're still trying to find a health and safety advisor. That's difficult, finding the right person for our organisation, because Kelsey did such a great job that we're trying to find somebody very similar. We are, however, using a contractor to help with certain aspects of the role, like checking contractor documents and things like that. However, unfortunately, some of these staff were hit by COVID, so there's a wee bit of a backlog there. But otherwise, the Health and Safety Committee have been great in supporting us, as have most staff. So I guess I just open it up for questions now to see if there's anything I can answer.
Okay, thank you. I'm just looking, working with contractors. That has increased score from 8 to 16. Some of the contract documentation expired. Oh yeah, so I think it had come up about our contractors not filling out their appropriate stuff before they start that work. So you are working along closely with them on that one?
Trying to, as best I can. I think the issue with some of the contractors not filling out their forms is that they're the ones that I guess tend to go out and kill the possums and things like that. So they're not paper people. So those people we've been trying to support and trying to get that documentation done.
Yes, yeah, okay. So, like the big infrastructure projects, those people they're pretty well up to date there.
Yes, we will also be looking at doing an audit when we get the new health and safety person on, just to make sure that everything is 100% up to date. Yeah.
Okay. Yeah. And another one that makes me a bit annoyed is people, our staff getting abused and that sort of thing. Yeah. How's that trending? Yeah.
I haven't had many reports as of late, so I'm hoping that it's not as bad as it was probably about a year ago. But it is always still a concern that we just need to keep in mind.
Yeah, yeah. And bearing in mind now we are operating under COVID from home, and that, so we may see that trend change again once we get back out into the field, no doubt.
Yep.
Okay, yeah. Joss, you got a question there or comment? Thanks.
Yeah, I do. Thank you, Chair. I note in the action plans and tracking that there are a number of them that are certainly not looking like they're on target. Take, for example, the annual health monitoring program is undertaken with its due to be completed date of the 1st of April this year, and it's on a 0. I'm assuming that that is related to the staffing issue that you have got, and potentially also COVID. Have we got some plans in place in terms of how to actually make up lost time to try and progress any of the work that is behind schedule at this current point in time?
At the moment, no, I do not have a plan. Part of the problem is the fact that the organisation that we use under COVID, will not actually do the lung capacity testing. So we can't test, and they won't test for us. So that is part of the problem. Overall, though, we are trying to get our staff to complete the testing that they will actually do for us. So we are continuing and trying to do our best in that area, but it won't be 100% complete until we actually get the lung testing done.
Yeah, that's fine, Beryl. I had a fair feeling that it was going to be complications because of the situation we're currently in. So that's fine. Thanks for that. That's all, Chair. Thank you.
Thank you. Penny.
Thanks, Colin. It's just a picky question, but I see on page 122 where we've got extended workload and stress as a 9 residual. Given the recent conversations and that it's out of 25, I just struggle with that one. Are there any comments? I realise this report was written quite a long time ago, but is it sending the right message for anyone that's reading it?
Possibly not. I will re-look at that one and check that one out.
Okay.
Thank you, team. If we've got no other comments here, Beryl, I'd just like to say thanks so much for overseeing this. And yeah, we sooner than later we do need a health and safety advisor. But thanks for the good work that you and your team are doing under stressful conditions at this stage. So
thank you. Really
appreciate that. So I move that the report be received. Thank you, Amy. Seconded, Rick. All those in favour? Yeah, moved. Yep, seconded. Aye. Against? No. Thank you. Right here. We come to the last item before we go into public exclusion. Item 611, insurance summary, 2021-22, page 129. Brucey, would you speak to this?
Yeah, thanks, Chair. Reasonably straightforward. The cost of premiums gone up 8.1% over last year. I think there was a slightly reduced increase over the previous year's increase. And we're still able to obtain insurance for everything we need insurance for, which is a good positive thing. So happy to take any questions.
Yeah, so dollar-wise, what was the 8%? What did it work out at, sort of?
Dollar-wise, in terms of the total increase, we're probably looking at around about $35,000.
$35,000, yeah. Okay, and that's just come out of, we've got to do it, I suppose, but yeah, okay, fine.
Yeah, I guess the alternative is to insure for lesser value or increase your excess as well, which we've looked at in the past and it just doesn't work out.
No, and you guys are on top of this, so no doubt. Just keep us in the loop, because it's going to be. I think the way we're going, this is not the first, won't be the last increase we do have here. Thank you, Stuart.
Oh, thank you, Colin. Just a quick question, Bruce. That 8% increase, how does that kind of relate to perhaps the increase of the underlying assets that we're actually insuring? I mean, have we seen a sort of a commensurate increase in the notional values that we're actually insuring against, broadly speaking?
No, not really, Stuart. If you look at the table that follows, you'll see that we had 56 million cover for material damage in 2021.
Yeah.
About 52 million, which is actually less because we sold Kensington Crossing, so that asset's gone. So, and when you scroll through and look at those other categories as well, I'm not seeing a significant increase in the overall material value of what we're insuring. And in fact, some of the categories have gone down in value.
So I guess that's kind of where I'm coming to, is that 8% increase might be notional, but actually it's relatively higher if one's thinking about what bang you're getting for your buck in terms of insurance premiums.
Yeah, absolutely. That's a good point.
Yeah, no, and I think that's that's the insidiousness of inflation creeping through.
Yeah, and it's been a market we've seen from the insurance market for at least the last 3 years, Stuart, just an increase in costs that don't seem to be stopping.
Yeah, I think that's that's probably at some stage worth noting, just so people understand that it's not necessarily an 8% increase. It's probably in real terms more. Cheers.
Thank you, Stuart, and really appreciate your comments there and your expertise in that field. Thanks so much. Yeah. Okay, I have no other questions. I'll now put the motion that this report be received. Thank you, Rick. Seconded, Amy. All those in favour? Aye. Against, no. Carried. Okay, well, that brings us to the end of the public part of our meeting. I'd like to thank the people who had it live streamed in for being part of this. We really appreciate you showing interest in our organisation, and I'd just like to say, as a councillor, I'm very, very proud of this organisation and where we're heading. So thank you once again, and we'll have to cut you off now, but have a lovely afternoon.